Friends and traders, welcome to this quick demonstration of trading pivots based systems. And if we have some assistance from the intermarket relationships, we can have a profound impact on picking up the right pivot in the right direction. So what we have here on the right side is the ES chart on a 5-minute basis. On the left side we have a relationship chart of ES and MES, and then we have various dynamic ratios which is going to be displayed here based on the beta value relationship between the two. And this is a dynamic behavior: 5 to 2, 3 to 5, 1 to 4, 1 to 1.5. They'll change dynamically. So once you have a system like this in place, what you can do is look at these blue lines reaching the extreme points and the market to be at a pivot. So I marked this level here. We can see this is a center pivot balance point, and then on the top we have 1, 2, 3, 4 lines. On the bottom we have there should be 5 lines on the top: 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. The basic rule of this is, if you're between the two thick green lines, the market breaks here, it goes there. This is Camarilla pivots, okay? And then if it goes there, we go to the next one, and there are a bunch of rules like these. We expect it to hold these resistance and support levels, but if they break, they go to L5 levels. So again, you can go crazy with the rules. So what we want to do is, we want to be simplifying our trading. Keep an eye on the center pivot and the relationship of the price with the center pivot. And then what we want to do is look at critical levels. And look on the left side is relationship chart. Right here, it went down to the red or below. That's a good trade. And we had a pivot level. And this is the ES chart. We're going to take long here. Same phenomena came here at the same time. Market came up, came down to this pivot level. We're going to take long. All right, here market comes up to this level. We have a small shorting location, and we were able to short for 10 points easily. All right, and on the pivot. Next opportunity came. Why? Because it came because of this. Look at the blue lines. And same thing on this side, because it is above the red. And here it is. Here market is saying expect some kind of short location. Let it come down close to the pivots. Stop loss is right here. And then we go short. So this day was a fruitful day. Let's go back to the prior day. I have marked that also for you to save your time listening to this video. So you can see right here we had the same opportunity. Market has intermarket relationship has punched up above this line, and we're looking to take a short at this location, and the pivot is here. You can always take some oscillations help here, and on this side, when your market is sitting here, it is saying okay, we go long here. This was a stop loss. Then it came back again, punching here, go long, right? So this was the extreme long location, the 5th pivot down, and then we see market volatility has gone up. Now we can take a long position here, which resulted in a very profitable opportunity. Again, you have to talk to your broker and qualified professionals who can advise you on taking the trades or not. If you're a self-directed trader, you can investigate this further. All right, market came down and the pivot very fast. This is a long location, I can see, and it helped us make that decision. Gave us the confidence we're looking for. All right. Here also, we are at the pivot early part of the morning, and we were seeing that market is punching down below on the pivot level. This is a little bit of a challenging trade. Now here, we were expecting market to go short, but I marked it here because of this left side. And then it went up. So this is what we have, is what we call as divergence between this guy top and this guy, because this guy right now is in the center. We don't know which way it's going to go. It could have gone up or down, but we know the market has gone up. This came down all the way, came up. He's not going through all the way. He should have been here somewhere, but he was not. A clear divergence within the market, and we have to be close to the pivot. So that is a good one as well. Now, if you use any oscillator like stochastic or RSI or momentum RSI, right? Stochastic RSI, stochastic MACD, or some other oscillations, you will see some value proposal here for you to go to the short side as assisted by this phenomena. All right. Now these beta values will change dynamically, right? So the ratios will change, but we are just taking some help. All right, so we did all this. Let's go to the last one. Now here, same thing is happening. At this point, market went down very fast and aggressively. Now look at this point. When we are at the pivot, it comes down aggressively. It tried to break it, and it does. Then it goes on the other side, from here to here. And we got this long, we got this short. And there you go. It came back again on my face. Now at this point, there's no divergence. Market came with lower low, so there's this intermarket relationship. So there's no bias here for me to take the trade actually based on this phenomena. Then it goes up, comes down. When it comes down here, I see that this guy is diverging. There's a triple divergence going on here. It made higher, high, higher, high, higher, high. This made a very aggressively lower low. All right. So here, it is trying to go long. I'm middle of nowhere. I will not touch it. I want to be at the lower edges. This is the lower edge. This is the lower edge. At this lower edge, I could have taken long. Got to stop out. Okay, now it came down again. Now this is even better because I see a huge divergence, 3 strike divergence, triple pivot divergence right here. Great long, stop loss will be here, take a long. I hope this is giving us the opportunity we have been seeking for a while in technical analysis domain. All right, right here. Let's go to the top. Let's go to the top. Let's go to the bottom. So here the bottom says early morning, market is coming down, go long, but there's no pivot here. We can skip it. Not a problem. This guy came down aggressively right here. Pick up this one. This was a good one, and we picked it up. Oh, this is late night. The market closed, but who cares? But remember, when we are picking something up, we need to find some stop losses. We have to define those stop losses. Okay, this one on the top. This is a difficult trade to trade because it is making higher, 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 but this ES is going lower, 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 low. We can just see it. If we can see it with some maturity, but the easiest rule is to be on a pivot. It's not in any pivot, leave it alone. But if you look at this big, huge range on a high time frame chart, this is one single bar, is a pullback to 50 or 68%, and market is diverging. Intermarket strength is going on, but ES is not following through. ES showing weakness. The stop loss will be somewhere here. You can want to take a stop loss location to be close to any close by pivot. When I come down here, this is pretty obviously saying long, comes down fast at the pivot, stops to the tick. We're not here after tick trading, we're after location trading, first of all. We don't know where the location is, what to do is a problem. So this is how you picked up this bottom. This bottom, now remember there's a red lines which we want it to be below red lines, and then if that doesn't happen, there could be a strength in the market. They have some advanced patterns. We will talk about it next time. All right. So between here and here, there's a serious divergence. Watch the left side. It is on red. Watch this. It did not quite make it. So there's a divergence going on here. So when you're at the level and you're asking yourself a question, shall I take this trade? let this be on the bottom side for you to assist you going in the direction you want to go. All right, let's do one last one. This one is pretty obvious. It's on your face right here, right? Now this could have been a loss first because it is going and touching this. You'll be tempted. Market came down. It didn't stop here. Just didn't stop. They tried to stop it, and the next bar took it down again, second time, right? Stop loss. Then you go in. You got it. On the top, you see there's a top sitting right there, and you got this top sitting there on the red bar. So this is technical analysis done right way. Right here, market is going up to the red line, pivots, look on the top, and it is right there. Here in the bottom, we'll see on this, it is holding on the bottom area, right? So this is, we can see, this is a good location to go long, and the green pivot. All right. So I think we covered all the volatile scenarios. This one, no trade. I don't see anything which is telling us to go. Only thing I can see. See these two levels you can go. We want it to be higher. More higher means better snapback. I think market is exhausted on one side. Okay. All right. So this could be some thing to look at to trade, especially if you want to trade the markets like this. Thank you.